Hello there. Welcome them to Financial Accounting Info. We in this video want to look at the preparation of notes to the balance sheet. So we are given a question that we are going to look at here. And the question reads: you are provided with pre-adjustment trial balance of new fashion designers, together with the adjustments to be made for the financial period which ended on 28 February 2014. Then on the credit part, we are only going to concentrate on 3.2. But we have to take note that in the previous video, we did prepare the income statement, and the profit that we got there was 189,000, 189,560. So we are just going to apply this net profit in the calculation of the capital. That is the closing capital figure in the capital note. So this is what we have. So this is we are having 189,560 rand. So we're going to concentrate on the second part. You say complete only the notes or annexures to the balance sheet as a 20 February 2014. Then on the note, balance sheet is not required. And then our stock taking is conducted as per the perpetual inventory system. So this is the instruction that we have. So we can just go through the question and try to see the information that we have according to this question. So if you go to the next page, you are going to see that you have got information A, whereby you are given the pre-adjustment trial balance as of 20 February 2014. So we're given a list of balances starting with the balance sheet account section. So you can go through this before you start to answer the question. Then also, we are given the nominal account section that we are having there. Then if you go to the next page, I will see that we've got the additional information that we are given in terms of adjustments and additional information. That is information B. So going through, we have got our information that is going down. That also you need to go through before you start answering. From information 1, going down to information 10. So this is at the end of the question. So we are going to prepare the notes. So if you go to the answer section, you'll see that we have got our note here. So we're going to start with the note for property, equipment, and vehicles, whereby according to this question, we only have two non-current assets, that is equipment and the vehicles. So we are going to calculate carrying value at the beginning of the year, which is being here. And then we, of course, to get the carrying value at the beginning of the year, we need to first put down the cost, and then we put the accumulated depreciation. Then we say cost minus accumulated depreciation. Then we get your carrying value. So that's the first task that we have there. So remember, when you are calculating your carrying value, we calculate it as our costs minus accumulated depreciation. So this is the formula that we are just employing here as we are calculating carrying value at the beginning. So obviously, we are going to start with the cost of equipment and vehicles. So we can go to the information that we are given and try to deduce the cost of equipment and vehicles. So you see that we have got our equipment at cost, which is 389,900, and then vehicles we have it which is 505,400. But before you transfer it, because remember this information that we are having in the trial balance is a 20th February 2014, which is where the year is ending. So these are figures that we are having after adjustments in terms of if there are any additions or subtraction in terms of disposal that took place during the financial period. They were already adjusted according to these figures that we are having here. So we need to find out in the additional information if there's anything that led to these final figures, or there's nothing. If there's nothing in the adjustments, which means we have to take these figures as they are and take them as our opening cost balance. If there are no movements in terms of our non-current assets. So we got there where they are mentioning about non-current assets and depreciation. That's where we are going to get the information. So here on information 6, that's where we're going to get our information. And you'll see that information 6 is saying depreciation must be provided as follows: on equipment, at 20% per annum on cost, and then a bar fridge was purchased. So this is part of the equipment. We want an addition that is there for 9,500 on 1 December 2030. Then last point on vehicles at 15% per annum according to the diminishing balance method. So what does it mean? it means we only have one movement in terms of an additional fridge, which is part of the equipment. So the 9,500 was already adjusted according to this figure that we are given for equipment, which is 389,900. So what we are saying is 389,900 is the balance of our equipment at the end of the year. So the 9,500 was already added to this figure that we are having here. So we need to remove it so that we can have balance before, at the beginning, when before we had purchased that non-current asset. So we are saying 389,900, then we subtract the figure of that fridge that came into the business along the year. The bar fridge is 9,500. So we are going to subtract that there and try to find out what are we getting. So if you subtract there, let's try to see what we get. 389,900. And then we subtract your 9,500. And then we are going to get your 380,400. So this is the balance of equipment at the beginning. So for and then for vehicles, we are going to take 505,500 and put it at the beginning because there are no movements in terms of vehicles, no additions and no disposals. So we can take it as it is. So we go there in the answer section. So we are here. So remember the costs that we are going to put there. We are saying for vehicles, we are going to put the figure as it is, which is our 505,400. 505,400 here for costs. And then we check the one for equipment. Remember, we've got 9,500 that was there. And then we subtracted it there from, so let's just check the figure that we are having there. So we have 380,400 for equipment after reducing with the figure for equipment that was purchased during the year. So we go there to start to calculate, to find out about accumulated depreciation. So accumulated depreciation, remember, are the figures that we are given in the balance sheet, in the trial balance, that we are having in the question. Here we are saying this is the trial balance. So the accumulated depreciation figures that we are going to start with at the beginning are these ones that we are given here. So what we are trying to say is that we are going to take our 84,600 for equipment, and then we also take for vehicles 95,500. So we go down, and we are saying 84,600, and then we also have the other one, which is our 95,000. 95,500. That is for vehicles, and then we have 84,600. That is for equipment. So we can just go and enter it as such. So if you go down to our other section, we are saying for depreciation, we are now saying for equipment, we have got 84,600. Then for vehicles, we have got 95,500. And then obviously we are subtracting to get our carrying value at the beginning. That is saying cost minus accumulated depreciation, then you get your carrying value. So if you calculate there, for equipment, we are saying 380,400, and then we subtract your 84,600. And then we're going to get a 295,800. Here we get your 295,800. We do the same thing to vehicles. We are saying 505,500. and subtract your 95,500. 505,000 is 400. 505,400. Then we subtract the figure that we are having there for depreciation 95,500. So let's just try to see what do we get there. So you're going to get your 410,000 if you say, and 505,000, 505,400 minus 95,500. Then you get your 410,000 as your carrying value at the beginning. So obviously we've got a total column. So you're going to start by saying 295,800 plus 410,000. And then you're going to get your 705,800 705,800. So on the second part, we've got 380,400 plus 505,400. And then we are going to get your 885. We can just try to add it. We are saying 380,400, and then we add your 505,400. And we get 885,800. So we have got 885,800. Then on the last part, you are saying 84,600 plus 95,500. And then you are going to get your 180,100. Then we go to the additions. The next item is additions, but you know that we only have one additions that we have on equipment, which is 9,500. So we are saying equipment, we've got 9,500. And for vehicles, we have nothing. Then on the total, we've got 9,500. Then according to the question, we also, according to the note components, we are supposed to have disposal carrying value, which we don't have anything there. And then depreciation for the year now is the one that is the next. So we are going to calculate depreciation for the year. You can go back there and go to the additional information. That way, we've got information that is explaining about depreciation. So we can start by equipment. Remember equipment, there's a bar fridge which was purchased for 9,500 on 1 December 2018. So we are saying we can start by calculating depreciation of this bar fridge, which didn't say the way. So we are saying it was purchased on 1 December, so it means it stayed December, January, and February. But remember, our year is ending in February. February 2014. So we have got 3 months that fridge stayed. So we're going to say 15%. Remember, sorry, it's 20%. Remember, they're saying 20% per annum on cost, so it's just saying 20% of 9,500. Then multiply by 3 over 12. So depreciation of equipment, we are saying equipment, we are just saying for the equipment that came during the year, we are saying 20% is a decimal, is 0.2. And then we multiply by 9,500. The answer we get, we make a proportion of 3 over 12 months. Then you get your answer. So we can just try to multiply it. Let's just 0.2. We multiply by 9,500. And then we multiply by 3 over 12. You're going to get your 475. This is depreciation for the equipment that came during the year. So equipment that stayed the whole year, remember, when we calculated there, equipment that we had at the beginning of the year is the one that stayed for the whole year. So we are going to see them here. Remember, we calculated here when we said the cost of equipment at the beginning was 380,400. So this is the same figure that we are going to use here. So we are saying 0.2 times 380,400. So here we're not going to make any proportion in terms of a number that said what they said the whole year. So you calculate it like that, you get 0.2, and then you multiply your 380,400, and then you're going to get your figure of 76,080. So we are saying 76,080. Then our total depreciation, now is going to be the one that came during the year plus the one that stayed the whole year. So 475 plus we are saying say 475 plus 475 plus the one that we are having for 76,080. And then we are going to get a total of 76,555. So this one is the total depletion that we have for the year for equipment. So we can just go there and put our figure. We are saying 76,555. So this is depletion that we have there for equipment. Then for vehicles, again, we go and try to see what we have. Then we come here, we see that the depreciation for vehicles that we have is 15% per annum according to diminishing balance method. And we know that diminishing balance method is equals to percentage times carrying value, of which we have to first find the carrying value. Carrying value, we find it by costs minus accumulated depreciation. So let's try to start by finding our carrying value. Remember, there were no additions or subtractions during the year of vehicles, so we're just going to use the figures that we have in the trial balance. So vehicles, we're saying cost 505,400. We subtract the accumulated depreciation for vehicles, which is 95,500. And we did that there in the notes. You can just check the figure there. We are seeing that we've got 410,000 indicating the carrying value at the beginning. This is the one figure that we are going to use, 410,000, and then we calculate the depreciation. So 410,000 is the carrying value, and the depreciation rate that is being used for vehicles is 15%. So we say 15% as a decimal is 0.15, and then we multiply by 410,000. And then we are going to get your times 410,000. And then we get your 61,500. So this is what we have in terms of, let's try to see our carrying value. We can just recheck in terms of our carrying value, whereby we are saying 505,400, and then we subtract 95,500. So here it's 409,900 here. It means here there's a mistake that we just need to correct there in terms of calculating the carrying value of the vehicles. When we say 505,400, and then we subtract your 95,500, we are going to get your 409,900. So we can just maybe try to correct it. There we are saying the figure that we have here is incorrect. We are supposed to have our 409,900. And then obviously this one is also going to be incorrect. So we add 409,900 to 295,800. And we're going to get your 705,700. So this is what we have. And then on the calculation again of depreciation, it means we are going to multiply the percentage by 409,900. So here we are saying we are saying 409,900, and then we multiply by multiplied by 0.15. You get 61,485. So this is the depreciation that we have for vehicles, 61,485. So we can just go there and indicate it as 61,485. Then on the total, if you add the two, you're supposed to get 138,040. So we now go to balances at the end now. So balances at the end, what we are going to do, we are going to say for equipment, the balance we are going to say our 380,400 plus 76 plus 9,500 of the for equipment that were added, which are the additions. So if you add this figure for cost, 380,400, and then we add 9,500, then we get the figure for cost at the end. So you'd see that cost at the end becomes our 389,900. 389,900. So we come here. Uh, 389,900. And then the cost that we have for vehicles is the same that we are having at the beginning, since we don't have any additions. So we are going to take this cost, which is 505,400. So we come here. 505,400. So this is what we have. Then for depreciation, accumulated depreciation at the end, we are simply going to say the accumulated depreciation that we had at the beginning plus the depreciation for the year will give us the accumulated depreciation at the end. So we are saying 84,600 for equipment, and then we add our 76,555. Then we are going to get your 161,000. Then we are going to get your 161,155. And obviously, we are going to subtract it. So if you subtract there 389,900 minus 161,155, you are going to get your carrying value, which is going to be your 228,745. So we do the same thing for vehicles, whereby we are saying accumulated depreciation that we had in the beginning is 95,500. And then we add depreciation for the year 61,485. So we do the same, 95,500. And then we add depreciation for the year, which is 61,485. And then the final figure that we are going to get for depreciation at the end of the year is going to be 156,985. And then we subtract there. So if you subtract there, you're going to get 348,415. So this is what we have. Then from there now, we can be able to find now the total figures there in the last column for totals, this column. So we add for carrying value 228,745, and then we add 348,415, and then we are going to get 57, which is 577,160. We do the same thing for the costs. We are saying 389,900, and then we add your 505,400, and then you're going to get your 895, 300. And then we do the same thing for accumulated depreciation, whereby you're saying 161,000 156,155, and then we add 156,985. And then you get 318,140. So these are the figures that we have after making our final calculation. So this is the first note that we have, that is the note for a non-current assets, whereby we are, in this case, we are having our equipment here, and then we also have our vehicles. So we can now move on to the next note that we are having. So the next note that we are going to look at is the note for stock, which is now going to be our note 2. So we can just indicate that this is our note 2, whereby we are going to say stock. So for stock, the total for stock, the total that we are going to have for stock is going to be in the last column. So we can just try to indicate there. We are saying stock there. So we are having our total here. So we list the stock that we have in the question, but the stock that we have in the question, we always find it in the additional information that is we are supposed to include in the notes and in the balance sheet. The notes that are stated, the figures that are stated in the additional information, we are told that according to physical stock count, the following stocks were on hand on 20th February 2014. So we have got trading stock 79,100, and then consumable stores 450. So this is stock that we have at the end of the year. So we can add the two to get the total for stock. So we can list those under stock. So for stock, we are saying trading stock. Whereby we are saying the figures that we have, 79,100, and then we have got consumable stores, which is 450. We add the two. We are supposed to get 79,550. So this is what we have there. We can move on to the next note. So the figure that we are going to start with is the debtors control figure. So we are going to say debtors control. So we go there in the question and try to see what figure do we have in terms of our debtors control. So if you go back to the question, you'll see that the figure that we are given is our debtors control. Is here, whereby we are saying it's 38,700. But you check if you've got anything that is reducing our debtors there. You'll see that we have got 4, which is saying write off a further amount as irrecoverable 700 rands. So this amount is going to reduce our debtors, which is we are going to say 38,700 minus 700, so that we are left with the net debtors. So we can there go to the other section and just indicate as such. So here we are saying 38,700 minus 700, and then the figure that we get, we are going to put it in the first column. We are going to put it in the first column, whereby we are saying our 38,000. And then obviously we are supposed to less provision for bad debts. So if you go to the question, you'll see that the figure for provision for bad debts that you are given in the question is 5% of current data. So we are going to say 5% of the net data figure that we have. So 5% of 38,000, and then we are going to get your 1,900. And this figure we are saying less, so we are subtracting. So if you subtract there, we are going to get a figure of 36,100. So we can put it here in the next column. So and then we check for prepaid expenses, but these prepaid expenses were calculated in the last video that we prepared the income statement, so we can just go and check the figures. So here are the figures that we have. We have got prepaid expenses, we've got insurance 400 and salaries 58,200. So we are just going to list this and then we add the two to get the total prepaid expenses. So here we are saying we are now saying prepaid expenses are the next, these are part of the receivables. And then the total of these prepaid expenses is supposed to come here. So we're going to list them here, whereby we're having insurance with an amount of 400. And then we also have our salaries with an amount of 58,200. We add the two, we get the total of 58,600. And this is what we have there. Then on the next part, now we have listed other receivables, so we now need the total. We now need the total of our trade and other receivables, which is here, which is supposed to come here. So we are saying 36,100 plus 58,600. And we are going to get to 94,700. So this is what we have in terms of trade and other receivables. And then we can move on to the next one, which is now cash and cash equivalents, which is now note number 4. Cash and cash equivalents. And then obviously we are going to look for bank balances, cash floats, petty cash if they're there in the question, and list them there and add the total. So if you go to the list of balances, you'll see that the bank balance that we have is on the credit side, so it will go under current liabilities. So we skip it. We go to cash float, 1,750. And then we have our petty cash, 900. So the two are the ones that are going to fall under cash and cash equivalents. So we go down. So we are here. So remember, we are saying we have got cash float. And then the amount that we are having, we are going to put it in the second column. Whereby we are saying cash float, the amount that we have there, it's 1,750. Then the next one that we have is petty cash. And then the amount that we are having is 900. We add the two, we get the total for cash and cash equivalents, 1,750 plus 900, we get 2,650. So this is the figure that we have for cash and cash equivalents. And then we now go to the capital section. That is the note for capital, note number 5. We are now saying capital. So for capital, the total figure for which is the closing capital is going to come in. So remember the formula that we use, we say opening capital, that is balance at the beginning of the year, then we add our net profit, then we less our drawings, then you get your final figure, that is closing figure for capital that is supposed to come here. So we can start with our balance at the beginning of the year. Balance at the at the beginning. So that balance, obviously, we find it in the trial balance. So we are here. We'll try to see what figure do we have for the opening capital. So if you come here, you would see that the figure for capital that we are having, we are given it here, which is 631,935. 631,935. Can just try to see. We are here, 61,000. So we can put it in the second column, whereby we are saying 61,935. So this is what we have. So having this figure now, we are supposed to add net profit. So we are saying add net profit. So this is the profit that is coming from the first question, which is the income statement. So we can just refer back to the question. We have it stated there is our profit that we got according to the last video. So the net profit figure was 189,560 here. So we can just use that figure. So we are here, we are saying net profit figure is 189,560. And then we less drawings to get the closing capital figure. Then for drawings, we go again to the question and try to find out what figure do we have for drawings. So for drawings, if you check in the trial balance, we've got here 122,450. 122,450. And then we check, we have got an adjustment that is increasing this value of drawings. That is on first item. The owner took 50 rand worth of stationery for his son, but this was not recorded in the books. So this was meant for his son. So basically, this describes our drawings. Remember, drawings says resources taken by the owner of the business for personal use. So this is for personal use. So this 50 is going to be added to the drawings that we have. 122,450 plus 50, then we get the total for our drawings. So here, so in brackets, you can just summarize the wiki, whereby we're saying 122,450 plus your 50. Here we have got 50. And then if you add the two, you get the total for drawings, which is going to be 122,500. But drawings, we are saying less, so we are going to subtract. Then we do the calculation, 61,935 plus 189,560 minus 122,500. So we can try to find out what figure do we get there. 61,935. We add your 189,560. And then we subtract your 122,500. You get your let's try to see. We are going to get your 100. Let's try to see the actual figure that we get there. Let's try to recalculate 631,934. 935. And then we add your profit, which is 189,560. And then we subtract 122,500. And we get 698,995. So here we've got 698,995. So this is the final figure that we have for our capital, representing our closing capital figure. So on the last part now, we now want the creditors note, which is note number 6, which is creditors control. We can just say traded other payables. Let's start by giving the description of trade and other payables, which the total figure is going to come here. And obviously, the first figure that we are going to put is trade creditors. That will be given in the question. Creditors. Then you go to the question to check that figure. What figure do we have in terms of trade creditors? So our trade creditors, remember, its creditors control is 44,620. And then obviously we have other payables that are there that we need to include also. We can just check on the list that we have from the previous video. Obviously, other payables that can include accrued expenses or prepayments of income, but we only have accrued expenses according to calculations. We have got rent, 54,400 is an accrued expense, and we've got interest on loan, 7,425 is an accrued expense. So those are the two that we're going to list there, plus our creditors control figure that we got there. So we go to the answer section. So we are here. So creditors control figure, remember, we got 44,620. And then we have our accrued expense. Of which the total is going to come here. So just split the two accrued expense that we identified there. We have rent expense. With a figure of 54,400. And then we have interest on loan, which is 7,425. And then we add the two. We are supposed to put our total here, which is supposed to be 61,825. And now we add the two so that we get our total figure for traded other payables, 44,720 plus 61,825. And then we get a total of 106,445. $106,445. So this is what we have on the last part now of our traded other payables note, which is note number 6. So this is the last note that we have according to this video. Hopefully the video was helpful. Let's stay tuned for more videos to come. Let's subscribe and share. Let's share the link to all our friends that are doing our financial accounting info. Let's stay tuned for more videos to come. Let's turn off the notification button so that we get updated of new videos uploaded. As for this video, I'm signing out. We'll meet again in the next video.